Do you think that what timeline would that put us in? Probably maybe late next year, early the year after, that we may enter into a Bitcoin winter?
Yeah, first of all, I'm one of the few that indeed thinks that there will be a next bear market, a crash, like we've seen a couple times before. Because there's a lot of people right now saying that we're done with the 4-year cycle and we will not have that kind of volatility and that kind of deep bear markets anymore. I think we will have those bear markets. You can see it in the option prices. It's priced in at 100% volatility. You can see it a couple of months ago when the China banned it, the mining. We went down 50% or more. We almost had it. we a crash of 50% right there. So that tells me that 80%, when something really big happens, is not out of the question yet. We'll have to go up quite a bit, at least to make the stock-to-flow model values of 100,000 and 288,000. But after that, we'll go down 80% again. I'm not looking forward to that, to be honest. Nobody probably is, but I guess that's part of the deal, and it's also part of the greed and fear that's in investors, and that people won't change. There will be FOMO if we, for example, hit the 100,000 level a couple of months from now, or maybe this month, according to the stock-to-flow model. People will FOMO in, and it will go up, and then after that, something horrible happens, another ban, another China ban or India ban or something, everybody's scared again. And the fear sets in. Fear and greed is never going away in Bitcoin.
What would cause you to change your mind?
Bitcoin is not unfailable. It's not like, so it can fail. As long as the risk return, and that's also the reason why I don't rebalance or rotate out of the asset into some other asset, because the question then is what asset has a better risk return profile. So the risk return profile of Bitcoin is exceptionally well, and I guess better than any other asset I see right now and I have ever seen, because the Sharpe ratio of Bitcoin is larger than 1. The average yearly return is higher than 150%, 160, 180, somewhere about that. And the volatility historically measured in standard deviation of returns, or looking at option prices, implied volatility, the risk is about 80%. So we have 150% return versus 80% volatility or risk, which is a Sharpe ratio of larger than 1. And there are not so many assets that have a Sharpe ratio larger than 1. So that is one very specific thing I look at, and that gives me a hard time looking for other alternative investments. Well, I could rotate into when Bitcoin goes up above my mandate or above my personal levels. When that risk increases even more, which is maybe not that possible, or the return comes down, because the risk will be high, is high, and will probably be high, but the return could go down. For example, this year, if we look at this year, it's only 66%. If I say that, I almost have to laugh. Yeah. 66 is not bad, but with 80% volatility, that makes a Sharpe ratio of lower than 1. If you would have 1 or 2 or maybe 3 years of lower risk return or risk adjusted returns, that would give some thoughts, and that would probably make other assets more attractive. So there's lots of reasons why that could happen. But up till today, I don't, even with the current drop in price, I don't see another asset with a risk return profile as good as Bitcoin.
Does Bitcoin need to double every halving for the risk return to be worth it?
Yeah, and more, because actually it 10x every halving in the past, right? It's gone from a cent to $1 to $100 to what is it now? 50, well, a little bit under 50,000. It has gone up on average 10x every 2 or 3 years.
I make an argument for 100x in 10 years. Yes, I think that could be made. What do you think?
Yeah, I agree. And I don't have a crystal either, but I do have my stock-to-flow model, which...
yes, you do.
I won't say it comes pretty close, but it gives some fundamental guidance as where it could go. And I see investors right now have a very limited set of assets that they could store wealth in, and it's real estate for sure. That's the biggest market, $100 trillion market. Of course, it's stocks and bonds, but in the commodity space, it's gold, and it's Bitcoin to a smaller extent because it's really a small asset with a $1 trillion market value. But right now, some forward-thinking, innovative investors might be okay to put a couple million or maybe even more into Bitcoin, but not like 10 million or 100 million, and where they would be perfectly okay to put 10 million in gold or 100 million in real estate. That will change in the next 10 years because Bitcoin will be more accepted, more by countries and more legally, regulatorily secure, and the scarcity will grow, right? So Bitcoin is now a little bit less, about as scarce as gold. And investors have to get used to that. But of course, Bitcoin is much more portable than gold. You can take $1 billion in Bitcoin on a USB stick, or even with some words in your head. Whereas $1 billion in gold, of course, is not possible to move that in your car. And the same is true for real estate. So you can not move real estate, and real estate is high maintenance. So Bitcoin is the perfect store of value once it has the legal clarity and the regulatory clarity that it deserves, and maybe also loses its exotic and innovative aura and becomes a more conservative and conventional asset, which takes time and is an age thing, like we talked about before. So yeah, I guess Bitcoin will continue to compete with other stores of values like gold and real estate in particular. And gold is 10 trillion, and real estate is $100 trillion market. So yes, I really do think that in the next 10 years, Bitcoin continues its historical path, its 12-year path towards the market caps of gold and real estate.
What's your opinion since October when a couple of ETFs got approved? Would you look at it as a positive for Bitcoin or not necessarily?
No, I think it's a positive. It's of course I'm from the old school where I have to where I like to have my own keys and no keys, no coins, not your keys, not your coins, etc.
I understand.
But I know a lot of people that are and a lot of companies, investment firms that have systems in place and processes, and they're not equipped to having their own keys and not equipped to even connect with custodian services that provide that key service, but they are, of course, used to buying stuff that is listed on exchanges, and they have mandates that are okay with stuff that's listed on exchanges and only listed on exchanges. So yeah, it would open an entire world of new investors to the Bitcoin asset that right now cannot invest in it. Is it optimal? No, especially also because it's futures based, which means that you have to buy at a higher level than the spot price, which is of course exactly what the cash and carry traders make use of. But even at that higher price, it's I guess worth it as long as the returns and the risk returns stay as high as they are. But of course, a spot ETF would be better from an investor point of view.
For sure.
I'm somewhat amazed the US regulator is not approving that. And what you see, of course, is spot exchanges in Canada and Europe. It's not the same as the US because that's the biggest capital market. But if you want to invest in a spot ETF, you can do it in a Canadian spot ETF or a German spot ETF. And that's so it's already there. So yeah, no, I think it's a thing.